Hi, thanks for joining Modern Wall Street's Trader Talk. It is the first trading day after the first rate hike from the Fed this year. Joining me to talk about it is Matt Cheslock from Virtu Financial. Hello, Matt. Welcome to the show.
Thanks for having me, Olivia.
Well, we saw some interesting reaction in the markets after the Fed decided to raise rates yesterday. Stocks soared, and we also saw a little buy-up in the bond market. And that is a contrarian move. So does that solidify that this was indeed a dovish rate hike?
Yeah, it's surprising. 2 or 3 weeks ago, we were talking about how hawkish the Fed was going to be. Now we're talking about how dovish they're going to be, and the fact that we're probably going to see 2 more rate hikes this year, maybe not 3. So that's why we saw that huge market rally today, yesterday. The dollar sold off. Commodities had a strong bid to them, and the market really reacted accordingly. And I think a lot of that was due to the rally that we saw in oil. It was almost going tick for tick.
Okay, so putting fundamentals aside, do we see any signs of a pullback in the equity market?
We don't see any signs at all of it. I mean, today, we're seeing a little bit of retracement today. Everyone keeps talking about how toppy it is. Everyone wants to be right first on that call to say, I called the market top. But we still haven't seen it yet. There's still a lot that's out there that's positive for corporations as far as infrastructure spending and tax reform. And we're talking about going out to the third and fourth quarter. So a lot of that is still in front of us. And if it does take place, the market still has room to go higher.
Okay, and as you mentioned, we did see an interesting drop in the dollar, and combine that with a decline in real rates, that's making gold, mining look really appealing. So how do you feel about the overall commodity sector?
Well, yeah, gold was hovering around 1,200 when the news came out, and it looked like we were kind of hoping for a move lower, like a washout, kind of washout trade where you're really getting some value down 1175, 1170 level. We didn't get that. We saw that huge spike. A lot of that was short covering. We see the follow through today. So if you were an investor, I think you were looking for a 2-day move out of gold. Going forward, what are you looking at for going, for Friday? People may be closing out any long position they made into that. So I'd be very hesitant to be buying gold in here. I'd look for another pullback down to 1,200.
Okay, thank you, Matt. Now, we also saw a lot of housing-related data this week. We saw an increase in mortgage applications along with housing starts. Home builders' optimism, that is the highest since its peak levels in 2005. So how should we digest this information?
Well, you wonder how much of that is built into the fact that now we have a forecast of what the rates are going to do. So the mortgage applications, are people getting those mortgage applications in before the rate hikes? Because it's going to be a little bit harder to get money. I mean, money's been easy for about 8 or 9 years. Banks have been harder. They've been less prone to lend it out. Now they're going to get more for their money. Are they going to be a little bit easier, but the rates are going to be higher? So the consumer's got to be very careful. But maybe that's why you saw the uptick now, people trying to get in before the massive move.
All right, Matt. Well, I don't know about you, but nothing sounds better than sitting in a home right now next to a fire with the game on, because it is freezing outside. So thank you so much for taking the time with us today.
Sure, anytime.